Good morning and welcome to Bloomberg UK, which is a special focus on the biggest challenges facing the British government, the British economy, the British financial services sector and markets. I'm Guy Johnson in London. Good morning. Today we're bringing you a deep dive into one of the country's top female CEOs. Aviva's Amanda Blanc is one of the few women leading a blue-chip company in Europe. Soon after taking charge, she led a project to slim down operations and pledged to reverse a share slump. Almost 4 years on, and the stock has gained more than 30%. Now, Bloomberg's Francine Lacqua spoke to Amanda Blanc about consolidation, the impact of AI and climate change on the industry, as well as opportunities for future growth.
If you think about workplace pension, we have a sort of 23-24% market share. But the thing is that that market continues to grow. We know that DC pensions will grow from the 500 billion it is today to 1.2 trillion by 2030. So there's plenty of growth opportunity. The wealth opportunity aside pensions is significant. So we don't see any lack of growth opportunities here. I think it's making sure that the business is really well positioned to be able to capitalise on that.
I know you're also extremely involved with, reforms in the City of London, some of the things that the regulators have been trying to push through. What's the right prescription for the UK to grow? So when you look at risk-taking and growth, do you need a strong reform of the pension market?
So I think in the pension market, what we would encourage is that there's more focus on advice. And today, only 10% of people actually take any advice because it's expensive, they don't think advice is for them. Whereas 70% of people want advice. Right. So there's clearly something wrong there. So we are very, very big advocates of this work that's going on currently with the regulation, with the Treasury, to encourage people to take, some sort of advice. Even if it's, a person like you bought products like this, to just encourage individuals to really think about that. The other area, I think, where the regulators can help is in the businesses that we can invest in, where we put our capital to use to get good returns. And the Solvency II reforms, which we've heard a lot about, and will I think really help companies like Aviva. We've committed 25 billion of investment into UK infrastructure over the next 10 years as a consequence of those reforms. So I think those are really important things that can help.
But is there something in the US market? I mean, they have the 401k. It's just a different, appetite from citizens and risk. There's a lot more retail investing. Is that a good template for the UK?
Well, whether or not it's a good template, I think definitely the culture is a good culture. Because what you see in the US is that people are engaging more with their savings. They're thinking about the businesses they want to invest in. Whereas in the UK, in your defined contribution pension, something like 93% of people will just take the default pension. They're not thinking about what they want to invest in. So I think there is a definite role for more financial education, more understanding of what you're investing, effectively what are your savings in.
How much are you thinking about AI, and is that really going to be transformational for your industry, or is it already infiltrated through algorithms and some of the websites and technology that you have?
I mean, AI already plays a massive role. If we think about motor pricing, it's all done by machine learning. It's very clever, it's very dynamic. And we've been using that for many years. We're using chatbots, we're using AI in some of our financial reporting. There's a lot of already within the business. However, every CEO that you speak to, every commentator, everybody's talking about what's the future role of AI. And I think we are doing quite a lot of pilots in different parts of our business around thinking about how can large language models really help us, for example, in handling claims, in assessing documentation. Those are some areas. Clearly, there's a much bigger role as we go into the future, but I think I'm more of a believer that this will happen in waves rather than, it will be a fundamental switch, one day in the market where suddenly everything will change.
But is that transformational to attract business, or is it transformational to actually look at claims?
I think it's a combination of all things. I think it's basically making the business more efficient, which means clearly that's better outcome for customers because you can deliver the product to them more cheaply. But it's also the way you can analyse the business and you can make good decisions. So I think it's a combination of all things. But ultimately, if we think about some of the systems that we have today, if we get those onto more agile platforms using AI, that's a better customer experience as well in the interaction with Aviva.
And so does that mean you get also more business from the same customer, or you're able to I guess, to take advantage of, solvability for these customers.
For sure. I mean, I think obviously our aim, because we can be with the customer from the very first junior ISA to the equity release mortgage that they may do at their sort of end of their retirement, we do believe that if we've got more agile technology, more ability to understand where a customer is in their life journey using AI, then clearly we can deliver better propositions.
Amanda, when you look at some of the, putting insurance on things is not easy. So you have climate change, you have natural disasters, you have disasters, for example, like the ship that went into the Baltimore Bridge that took it down. Like, how difficult is it to look at these man-made or not man-made disasters and decide what kind of insurance premium you need?
Well, of course, the thing is that in many cases, particularly in general insurance, you only get to use the product when usually something bad has happened. Insurance is there to build back, to help to recover, so that's how you use your product. But I think we're constantly having to assess what's the impact of climate change, what's the impact of biodiversity. All of these are areas which will go into our pricing of our models, because ultimately, of course, if climate change continues in the way that it does today, then things become uninsurable. So it's very much in the interest of insurers to make governments, make customers think about decarbonisation and how they're thinking about their transition planning.
But you are there actually in times of need, actually, as an insurance company.
Yeah.
But do customers see that?
Well, I think insurance can sometimes get a bad reputation. Sometimes that's self-inflicted, by the way, in the past. But I do genuinely believe that when I look at the experience that our customers have, for example, in a bad flood, where effectively your home is uninhabitable for many, many months, and we were able to put people into rented accommodation, provide them with, clothing, furniture. The response that you get back from that is, I'm really glad that I'm insured with a reputable company. Yeah. So I think it's only when you actually experience the product, that's when you really see the value of the product. And, and then that's usually when something bad happens, particularly in general insurance.
I mean, insurance, financial companies, financial services seem to be getting bigger because there's a lot of consolidation. Do you expect that also within insurance?
I mean, you've seen that in insurance. I think, if you take our own example over the last number of years, whilst we haven't done big M&A, we've bought a wealth advice business, we've bought an additional protection business, we've entered into the Lloyd's market. I think you will see more of that for sure, because scale is really important, because scale gives you, buying power, it also gives you diversification.
I mean, do you spend, and I know you don't want to talk about speculation, but do you spend a lot of time looking at whether you're a takeover target or whether you want to buy something, or how do you navigate it as a listed chief executive?
I mean, I think you would expect us to see most of the things that come onto the market will pass over our desk at some point. We will look at that, but I'm always looking at this is this the right thing for Aviva? Is this going to add value to Aviva? Is it going to help us to deliver value for our shareholders? And that can be around synergy. So, is it going to help us to be more efficient, or is it going to fill a gap that we don't currently have today? So it's strategic, and I think you will look at M&A differently depending on those two things. But I think we've been very clear that for us, M&A has a high bar, and so we're constantly looking at it, but it would have to be a quality acquisition.
Quality acquisition. We're going to bring you more of Francine's interview with Amanda Blanc after the break. They're going to talk about diversity, sexism in the city, and what that means for leadership. That conversation next. This is Bloomberg. This is Bloomberg UK. Good morning, everyone. I'm Guy Johnson in London. Let's talk about what is going on over at Goldman Sachs. Goldman Sachs reportedly set to reveal that its gender pay gap in its UK operations actually widened last year. The Financial Times is reporting that the mean hourly pay difference between men and women at Goldman Sachs' main UK entity rose to 54% from 53.2% in the previous year, i.e. it's going in the wrong direction. The FT says that is the highest it's been in over the last 6 years, which takes us back to our conversation with Aviva CEO Amanda Blanc. Amanda is also a champion for equality and diversity in Britain. Bloomberg's Francine Lacqua asked Blanc if she's disappointed there hasn't been more progress on this front.
I think you'd have to say yes to that because, you know, if you're looking at the FTSE 100 and you have 10 female CEOs, 90 male CEOs, you have to say, I mean, something's not quite right about that. And if we look in financial services, and I'm the government's Women in Finance Charter Champion, we're seeing 1% improvements year on year. Now, that's good, and we should celebrate that, but it's not quick enough. So I think we have to have a look at, you know, what's going wrong, and it's really the pipeline of women, if I talk about gender, women coming through, that is not strong enough. So we have to make sure that we keep women, you know, at work, being promoted, but always the best person for the job, but making it easy for families to, for the man and the woman to be able to work.
But is that flexibility? I mean, I know there's been, and you know, you've testified, and we saw the episode with the Garrett Club. Is it still easier for a man to do business in the city?
I'm not sure it's easy for a man to do business. Look, I think we have seen definitely some bad behaviours, and, you know, certainly I asked for women to contact me prior to giving evidence of the Treasury Select Committee and heard about lots of very, very bad experiences. But I think what you have to do is get shared parental leave right. If you're looking for what makes it easier, you know, at Aviva, 80% of our men take the full 6 months of parental leave. Now, I think that sets then the tone right from the very beginning of childcare responsibilities, that is a shared responsibility. That makes a really big difference. I think at that point it then becomes easier for the men and the women to do well. And what we want clearly is for both to do well.
But so is that more important than sexism in the city? I mean, I was fascinated, you know, for me it was a watershed moment because this was on LinkedIn, and you say, you know, I would like to hear from testimonies of people that have had, you know, allegations, either assault or bad experiences being a woman in the city. That was quite powerful. Yeah,
it was powerful, and I mean, it was very emotional actually, because I hundreds and hundreds of private messages from that. So you do still see that some women are experiencing you know, bad behaviour, and you know, that is clearly wrong, and that has to be dealt with by organisations. But I think there's the behaviour point, and then there's the sort of systems, processes that you put in place to make sure that opportunities are available for both men and women to succeed. But I think the behaviour has to be dealt with. It has to be dealt with by organisations, and women have to feel that if they speak up, that will be dealt with.
Do you think that's gone backwards actually, that less people want to speak up?
I'm not sure that it's gone backwards. I think that people are now more prepared to call it out. So you are seeing more examples of that. It's hard to say if it's gone backwards, because I think 10, 15 years ago, you wouldn't be hearing about this at all.
I mean, there are also a number of you know, diversity initiatives that the government said, well, actually, we're not doing it in the right way, we're wasting money, and it's not having much of an impact. How do you look at that?
I think the danger with a lot of these things is that there's, you know, there's about 50 different initiatives within any organisation even, and effectively then you lose focus and you're not concentrating on what is actually going to make the biggest difference. And I think at Aviva we've spent some time really focusing on what are the things that make a really big difference. So it is shared parental leave. It is sponsorship programs. It is making sure that you've got, you know, access to all of the roles, that effectively that you are encouraging access to all of the roles that are available. Those are the things I think you have to focus your attention on.
And is it something that, I mean, do you feel like UK PLC is actually listening? Even if without, you know, government incentives?
I do honestly believe so, because I think that if I speak to whether it's other female CEOs or male CEOs, everybody realises that a diverse workforce makes better decisions, looks after customers better. If I think about Aviva's 19 million customers, you know, they are from all walks of life. You know, and therefore, if you've got an organisation which doesn't reflect that, you're not going to build big, you know, good propositions. You're not going to make good decisions. So you have to have that represented. I think everybody gets that. It's between the getting it and the implementation of the strategies. I think sometimes things can not happen.
And when you look at leadership, what does it mean being a leader, being a chief executive in 2024? Is it different to what it was like 10 years ago?
I do actually think it's different. So if we think about, you know, maybe go back 20 years, leadership was much more command and control. It was much more, trust me, I'm the CEO. I think there was less accountability, and at least, you know, you had longer, if you like, to deliver. I think today, I think CEOs are thinking about, well, what do their colleagues think? What do their customers think? What do their investors think? And I think the pace is really quick, and you have to be able to communicate really, really well, effectively. You have to be simple in your strategy. Yeah. You have to get things done. You can't afford to take time. You have to be able to act decisively.
But that's difficult.
Yes. Well, is it? I mean, you know, doing what you say you're going to do, is it really that difficult? I think the environment is difficult in that everything you do is judged, and it's judged pretty quickly. But everybody's living by the same rules, effectively. So it's not like you're being judged any different to, you know, any other CEO. But I think that, you know, this, you know, you need a big strategy, and it takes months to deliver that. You know, I think sometimes we overcomplicate it. You know, if you know your organisation, if you know your industry, if you know your business, you know what needs to be done. And then it's a question of gathering the right team around you that have the same beliefs, that, you know, think the same, think that there's the same way of doing things, and just getting on with it.
So what's the hardest bit of actually being a chief executive of a listed company? Is it building? Is it building your, I guess, your troop? Is it building your board? Is it trying to get things done? Is it convincing, you know, everyone in the business?
I think it's a constant. It's a big communication role being a CEO, isn't it? You know, you have to communicate to your investors, to your board, to your colleagues, to your customers, that this is a good company, that this is worth investing in, whether it's your time, your product, or your money. So I think, is it a harder job than other jobs? I don't know. It's a full-on job. It's a 24-hour-a-day job. There's not a minute of the day where you're not thinking about Aviva, you know, or what's going on. How could we respond to a different opportunity in the market? Challenging yourself, that you're constantly reinventing the organisation. But I love it.
That was, of course, the Aviva CEO, Amanda Blanc, in conversation with Francine Lacqua. Meanwhile, the asset manager Aviva Investors, part of the insurance group Aviva, is tapping Australia's pension fund to partner on private deals in the UK and Europe. As the surging pool of retirement savings there lures more offshore suitors. The firm, which manages 262 billion euros of assets globally, has been talking to some of the funds about co-investments in logistics centres, residential development, in its push to double its real estate asset portfolio over the next 5 years. And be sure to subscribe to Bloomberg's In the City podcast. That's with Francine Lacqua, along with David Merritt. You can find it on Apple Podcasts, Spotify, or wherever you get your podcasts. New episodes every Thursday. Coming up, we're going to take you back to the NATO story. We're going to get the latest lines from the NATO Foreign Ministers meeting. The alliance marking its 75th anniversary today. More on that next. This is Bloomberg.
Minister Kuleba, Dimitro, welcome back to NATO. It's always a great pleasure to welcome you and to see you here. And let me start by once again recognizing the courage, the determination, the bravery of the Ukrainian people, the Ukrainian armed forces, and you personally in standing up against Russian brutal aggression against Ukraine.
Thank you for your personal efforts and forward-looking approach when it comes to initiatives how to ensure sustainable financing and support to Ukraine.
The NATO Secretary-General Jens Stoltenberg speaking alongside the Ukrainian Foreign Minister Kuleba in Brussels. The alliance there marking its 75th anniversary. Some big questions that need to be answered about its future. And the NATO Secretary-General will be doing just that. Jens Stoltenberg will be joining the surveillance team for a live interview tomorrow. Plenty to discuss. Aid to Ukraine, the prospect of a Trump presidency. Who's going to replace Jens Stoltenberg? That interview tomorrow, 12:30 p.m. UK time. As I say, NATO foreign ministers are meeting in Brussels today, the alliance marking its 75th anniversary. Some key questions that need to be answered about where NATO goes from here. Let's bring in Bloomberg News Director for Europe, Middle East and Africa, Ros Matheson. In terms of the UK position, we've got David Cameron, the Foreign Secretary, delivering a speech in Brussels later on. What message is he going to take to his colleagues when it comes to the UK's position on whether or not Ukraine should be given more aid, and ultimately whether Ukraine should be allowed to be part of the organisation?
Well, the UK has been one of the biggest allies and supporters of Ukraine since Russia invaded, including sending weapons and arguing the toss always to send ever stronger weapons, longer range weapons to Ukraine. But really what David Cameron's speech is about is those questions you mentioned, the fundamental future of NATO. What is the role of NATO going forward? And he argues that, for now, Europe, the UK, NATO are in the same moment with Russia in a way that the UK and France were in 1938 with Nazi Germany, the sense of not appeasing a nation to avoid a broader war, saying that Russia, Vladimir Putin is a tyrant, in his words, who cannot be appeased. And in a way that NATO also needs to make the case for NATO, that NATO members have to keep arguing and explaining why NATO is relevant, what its role should be, and that it should remain unified, particularly when it comes to Ukraine, because we are seeing those cracks emerging amongst some member states, potentially the US also going forward, about what the role should be with Ukraine. And the conversation at this meeting is really about that question of Ukraine.
There's talk in Brussels of joint funding for European security. What role would the UK play in that?
Well, certainly it would be an advocate, because at a member state of NATO, they'd all have to contribute. That's how this $100 billion fund for Ukraine, for example, would work. And the idea that also more broadly for self-defense, these nations need to be contributing a proportion of their own budgets to NATO. So you need every member state to agree to that. The UK is probably going to be one that signs up to it. But what we're hearing, of course, is that Eastern European nation states, others are far more cautious about it.
Ros, great stuff. Thank you very much indeed. Bloomberg's Ros Matheson. And another reminder to subscribe to the podcast In the City. You can find it wherever you get your podcasts in the city. Much more to follow. This is Bloomberg.